The power of dividend snowball effect. Compound your wealth. Welcome back to the channel Wiz Graham, where you can get practical wisdom for money, investing, success, and more. In today's video, I'll be sharing the power of the dividend snowball effect and how it works towards compounding your wealth. But before we begin, please give this video a big thumbs up and don't forget to subscribe so that you wouldn't miss any of our new videos that will be uploaded every week. Now, let's get started. Warren Buffett says, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." What exactly is compound interest? If you have $100 with a 5% interest rate a year, you'll have $105 at the end of the first year and $110.25 in the second. The 25 cents is from the $5 interest on the initial $100 deposit. Even though 25 cents may not be that much, it increases up value over time, so even if you never add some money to that account in 25 years, you'll have almost $340. So how is compound interest connected with the snowball effect? Warren Buffett quotes, "Life is like a snowball. It depends on finding wet snow and a very long hill." What do you think happens when you push a small snowball down a hill? Yes, it picks up snow on its own while it rolls, and when it reaches the bottom of the hill, it becomes a giant snow boulder. But how is that related to growing money? The snowball effect is a metaphor for the term compounding, and compound interest, as described earlier, explains how the small snowball resulted in a giant one upon its travel. Therefore, the power of compounding is the snowball effect that happens when you receive returns on your earnings as well as on your original investments. Investing in high-quality dividend stocks generates large amounts of dividend income over long periods of time, one of which is the very well-known dividend aristocrats. The dividend aristocrats are a select group of 65 S&P 500 stocks with 25-plus years of consecutive dividend increases. They have a long history of outperforming the market. Furthermore, there are 36 update lists of businesses with 50-plus years of consecutive dividend increases called Dividend Kings. Each Dividend King satisfies their primary requirement to be a dividend aristocrat twice. Investing in this type of business is the surest way to benefit from the snowball effect. And later in this video, I will share the top 5 dividend kings in the year 2022. So keep watching until the end. Warren Buffett, known as the Oracle of Omaha, is one of the most successful investors of all time with a net worth of $115.6 billion. He runs Berkshire Hathaway, which owns more than 60 companies, including insurer Geico, battery maker Duracell, and restaurant chain Dairy Queen. Imagine, he first bought stock at age 11 and first filed taxes at age 13. How about you? What were you doing by that age? Going back, Buffett's wealth comes from the massive benefits of the snowball effect through time. He compounded his wealth through investing in shareholder-friendly businesses with strong competitive advantages and better prices. He says, "All there is to investing is picking good stocks at good times and staying with them as long as they remain good companies." Indeed. Now look at Berkshire Hathaway's portfolio. Its top 5 stocks consist of Apple Incorporated with 43.86%, Bank of America with 12.67%, Coca-Cola with 8.77%, American Express with 7.08%, and Kraft Heinz with 5.09%, making up a total of 77.5% of the portfolio. These 5 stocks represent a compounding machine, and what's interesting in these 5 businesses is that all of them are well-established businesses that pay dividends. The advice of Warren Buffett on investing? Never invest in a business you cannot understand. Exactly. He doesn't mean you can't invest capital in any areas of the market, but rather approach with caution. Many investors have lost money chasing the new stock trend, but you can't benefit from the snowball effect by investing in unknown enterprises. Riches multiply as a result of consistent, predictable results. Now, let me share with you the top 5 dividend kings today. Dividend king number 5, Parker Hannifin, PH. The 5-year annual expected return is 9.3% with 1.29% dividend yield. Parker Hannifin is a motion and control technology company with a broad range of products. The corporation was started in 1917 and now generates over $14 billion in annual revenue. Parker Hannifin has been paying a dividend for 71 years and has grown that payout for 65 consecutive years. In recent years, the company has experienced significant expansion. Dividend king number 4, Becton, Dickinson and Company, BDX. The 5-year annual expected returns is around 10% with 1.38% dividend yield. In the medical supply industry, Becton, Dickinson and Company is a global leader. The corporation, which was formed in 1897, now operates in 190 countries and generates annual revenues of more than $19 billion. Outside of the United States, the corporation generates nearly half of its sales. The medical division, which comprises needles for drug administration systems and surgical blades, is one of the company's 3 parts. The life sciences branch manufactures equipment for collecting and transporting diagnostic specimens. Lastly, the intervention section comprises a number of goods developed by what was once known as BARD. Dividend king number 3, Cincinnati Financial, CINF. The 5-year annual expected returns is 9.6% driven by 8% EPS growth and a 2.17% dividend yield. Cincinnati Financial is an insurance company founded in 1950. It provides insurance for businesses, homes, automobiles, and financial goods such as life insurance, annuities, and property and casualty insurance. Cincinnati Financial produces money in 2 ways as an insurance firm. It makes money by collecting premiums on policies purchased and investing its float, or the big sum of money that represents the difference in temporal value between premium income and insurance claims. Dividend king number 2, Altria Group, MO. The 5-year annual expected return is 9.6% with 7.4% dividend yield. Altria Group was founded by Philip Morris in 1847. Today, it is a consumer staples giant. In the United States, it sells Marlboro cigarettes as well as a variety of non-smoking brands such as Skoal and Copenhagen. Altria also owns a 10% investment in global brewer Anheuser-Busch InBev as well as significant stakes in Juul, a vaping goods producer and distributor, and cannabis firm Cronos Group, CRON. Dividend king number 1, ABM Industries, ABM. The expected 5-year annual return is 14.6% with 1.82% dividend yield. For the past 53 years, ABM Industries has grown its dividend. Janitorial, electrical and lighting, energy solutions, facilities engineering, HVAC and mechanical, landscaping and turf, and parking are all services provided by ABM Industries. The stock also appears to be cheap, with a price-to-earnings ratio of 12.2 for fiscal 2021, substantially below the fair value estimate of 17.5. Remember, there is nothing magical about investing in the Dividend Kings. They are simply a group of high-quality businesses with shareholder-friendly management teams that have strong competitive advantages. Buying firms with these traits at fair or superior pricing and holding them for a long time will almost certainly result in high long-term investment returns. The most enticing aspect of investing is that you have an almost limitless number of options. You can invest in either common or excellent enterprises. As Warren Buffett says, when we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. How do you find this video? I hope you learned a few tips on dividend investing and start considering your new investing in the long term. If you have thoughts to share, feel free to comment down below. Well, that's it for today. Thank you for watching and see you again soon in another one of our episodes. Once again, if you like this video, please give it a thumbs up and share it with your friends and family so that they can enjoy it as well. With that stated, have a wonderful day everyone, and I'll see you in the next one.